And stocks have been rallying into all of this the past couple of days. Let's bring in Tobin Marcus, head of policy and politics at Wolfe Research. Because, Tobin, I know you think they're just whistling past the graveyard here, but maybe they're just looking through it and saying it's going to be a drawn-out process. Maybe there's tiered negotiations to bring tariff levels down, a la Vietnam and Israel. What do you think?
It certainly does seem like markets are looking through this, at least for now. We'll see what kind of an announcement we get. I think the strong implicit assumption behind the 3 days of gains that we've been seeing is that these tariffs are not going to be lasting. So regardless of what the numbers are, I think the assumption seems to be that we're setting up for negotiations. A lot of this is ultimately going to go away. I am somewhat less convinced that this is going to be a flash in the pan. I think there are certainly different views within the White House. So depending on who you're talking to, you're getting different perspectives on whether or not this is mainly meant for negotiation or if this is something that's actually supposed to stay in place. Certainly the citation of revenue figures in the $600 billion range that we've seen from Trump, from Navarro, from Lutnick would suggest some aspiration to keep this in place.
Oh, sure. Nothing we've heard from them is anything but the idea that, get used to it.
Right. I think the president has a sincere vision of reshaping the global trading system. And to me, big tariffs, I think, are much better suited to that vision than the kinds of negotiated settlements that seem realistic to get here. The other point that I would make, and we may have talked about this before, is to the extent that these numbers are mostly driven by non-tariff factors like value-added taxes, it's going to be harder to negotiate them away. It's sort of simple to say, you take your tariffs down, we'll take our tariffs down, but tariffs themselves are not primarily what's driving the high rates that we think that we'll see later today.
And so if they stick around, you put it this way in your note, I'll ask the question, what happens after this announcement today?
Yeah, if these tariffs actually stay in place, I think there is significant room for markets to grind lower as we start seeing the actual impact of tariffs on the economy and on earnings. Generally, I think companies have taken a very optimistic line on what these tariffs are going to mean for them. We've gotten a lot of questions from clients about, thus and such companies saying that they're safe from tariffs for whatever reason. And typically, we don't agree with those assertions. We think that they do have some exposure. So, if these stay in place rather than being quickly negotiated away, we're going to see growth slow down. We're going to see that slowdown in growth impact companies even beyond the sectors that are directly impacted by tariffs. And we're also going to see those direct impacts play out in guidance and earnings.
And as Megan was just outlining, it's not as if what we hear today is the only thing happening on that tariff front. Just this week alone, we've got the potential Venezuela reciprocal tariffs. We've got Canada and Mexico to contend with once again. So as you sift through all of these, what's the signal? What's the noise? What's the most important thing that investors and that global companies have to figure out?
Absolutely. The 20% China tariffs sure seem like they're here to stay. A lot of companies that fully escaped getting hit at all during the Trump 1.0 China trade war are paying 20% tariffs, which are quite significant. The steel and aluminum tariffs show no sign of going anywhere. The auto tariffs will be very significant if those stay in place. I think there's some question there, but they're scheduled to hit vehicles right away, and I think substantially all auto parts eventually, with not a lot of protection for the North American supply chain. And then over and above that, we have whatever we get on reciprocal. So we think there's a lot here. Again, we think it's going to take time to be digested. The economic impacts are just beginning. You look at things like the recent ISM, it's pretty negative signals across the board in terms of how companies are reacting to this.